Hello and welcome to this afternoon's webinar, VMQ Stocks Mid-Year Market Update. Thank you so much for joining us. We're happy to have you all here. So my name is Jenna Brashear and I'll be your host for today. And a few things to go over before we begin. I want to remind all of our webinar viewers that AAII is a nonprofit educational group and is not a financial advisor and thus is not able to give personal advice. If you'd like to read our full disclaimer, please visit aaii.com/privacy/disclaimer. And this afternoon is a special event as we get to introduce our newest financial analyst, Sam Levine, and officially welcome him to the AAII team. This is his first webinar with us, so please help us in welcoming him in the GoToWebinar chat section. We also have our moderator, John Bykowski, leading the interview with Sam. And I want to thank both of them for being with us today. Please be sure to keep an eye on chat through the webinar as well. We'll be sharing helpful resources throughout. And then if you have any questions for our speakers during the presentation, you can submit them using the question section of your GoToWebinar control panel, which is located on the right-hand side of your screen. Once our presentation concludes, John will select a few questions for Sam to answer. And then if your question isn't selected during the broadcast, feel free to email us at members@aaii.com. And if you experience any issues with the audio or video of the webinar, please visit gotowebinar.com or message us in the chat for assistance. Just a friendly reminder that this presentation is recorded and a replay of the webinar will be sent to all who attended today. The recording and handouts will be accessible at aaii.com/webinars later this week. And in this presentation, Sam will cover a few things such as why a strategy that combines value, momentum, and quality remains relevant in 2026, recent VMQ portfolio updates, performance highlights, and some notable stock winners, key green flags and red flags to watch for when evaluating value stocks this year, how to use VMQ resources to uncover and research investment opportunities. And we always love that our webinars are interactive. So after our presentation, we'll host a live Q&A, including a special AAII Platinum promo. So please make sure to stay for the entire broadcast. And with that, I'd like to hand over the presentation to John to kick us off.
Thank you so much, Jenna. Thank you very much for joining us. My name is John Bykowski. I'm president of the American Association of Individual Investors, and I'm pleased to welcome Sam Levine. Sam, why don't you introduce yourself to our members and tell us a little bit about yourself?
Thank you very much, John. Thank you very much, Jenna. It is such a pleasure to be here among such smart people. I joined AAII in January after writing for Better Investing for close to 10 years. I have a little over 3 decades experience in and near the investing industry, including time spent as a broker, portfolio manager, an adjunct professor at Wayne State University, and a past board member of the CMT Association. Like John and Charles, I hold the CFA charter and I'm a member of the CFA Society of Detroit. And I also earned a master's degree in personal financial planning from the College for Financial Planning.
That's wonderful. And so now you're in charge of the VMQ Stocks area. And tell me, how does the VMQ Stocks strategy differentiate itself from traditional value investing approaches? And why is the strategy really relevant in today's marketplace? And if we had some technical difficulties here, so if you need me to advance the slide deck, just hit ding or to tell me where to go.
Sure. Okay, well, it's easy to define value, John. A value stock is one that's relatively inexpensive compared to other stocks. But the real challenge is defining what inexpensive means. For example, a stock with a low price to sales ratio might deserve to be cheap because it has low profit margins. A stock that has high gross margins and a relatively low price to sales ratio might also appear cheap, but it could also have so much debt that the company could be in trouble when sales decline. And then there's also a possibility that you could have a financially strong and inexpensive stock, but the market isn't paying attention. That's why the momentum grade appeals to me in VMQ. It confirms that the market is seeing the same thing that we're seeing.
Oh, very good. I'm sorry, I lost my my presentation here for a moment. Let me just get it back up on screen.
So let's move to the next slide if we could.
Certainly.
So as you see on the slide, VMQ is a factor-based approach. We might want to go back one, John, actually. And that begs the question of what is a factor? And a factor is a quantifiable characteristic that affects the value of an investment. There are macroeconomic factors such as interest rates, inflation, employment, and disposable income. And then there are security-specific factors such as price to earnings, price to sales, relative strength, and return on assets. Though the macroeconomic factors do play a role in driving VMQ stock prices, as they do with all stock prices, for this strategy, we focus on the security-specific factors. VMQ takes the perspective that it's hard enough to make a prediction about the economy, let alone how any stock will react to any change we predict. So there isn't too much discretion in VMQ, but the rules allow me to choose from the ideas list when a stock is to be added. That helps me avoid adding to any industry or sector over concentration. And by the way, we might have a new guest on this webinar, my dog behind me, and I hope no one minds.
And what's your dog's name? Just so that we know.
It's an Irish setter named Dash. Very well named,
Dash.
John. Very well
Excellent.
named.
Well, if I'm glad to hear that. Well, if he dashes across, we'll welcome his questions as well, as long as he gets in line with everyone else. Can you
He'll
walk us
bark
through
him out when he feels it. Let's go to the next slide too, please, if we
Well,
could.
can you walk us through a specific example of how the three pillars, value, momentum, and quality, work together to identify an investment opportunity?
Sure. Two of our current top performers, AutoNation and BJ's Wholesale Clubs, were bought in March of 2020, within a week of the World Health Organization declaring a COVID-19 global pandemic. And when we think back at that time, most investors, including me, would be very hesitant to buy any stock, let alone a consumer discretionary stock, when the global economy seemed on the verge of collapse. So the nice thing is that VMQ doesn't try to forecast those macroeconomic factors, but the Fed was more than happy to step in and sort of create that good outcome when the government intervened and flooded the world with liquidity. So let's go to the next chart, please, where we can see how the stocks did from March 2020 to present.
I believe that's being displayed right now.
Okay, is that what we're seeing?
Yes, sir.
Yep. All right. So AutoNation is up by 366.9% from March 6, 2020. That's when we issued an alert. And BJ's Wholesale Club returned 265.3%, from its alert 2 weeks later on March 20th, both of them outpacing VMQ's benchmark IYY. Let's go on to the next question too, maybe.
Sure. What are the quantitative criteria or thresholds that the VMQ strategy uses to evaluate each of the components that make up the value, momentum, and quality when screening for portfolio candidates?
Yeah, great question. We're biased towards being fully invested, so we don't set absolute numbers that could keep us out of the market. We won't turn down a stock simply because, say, its price to earnings is above a hard limit. Instead, we rank the ratios on other indicators for a stock against all the other stocks in our database. The more attractive a stock's ratio or indicator is, the higher score it gets. That's true of both individual ratios and the overall value, momentum, and the quality scores. So the grades represent the quintiles where the scores fall. And a stock with a value score of 85 is in the 85th percentile and would get an A grade because its score falls between 81 and 100. Likewise, a stock in the bottom 20th percentile will get a failing grade or an F grade. How about the next slide?
The qualifiers, perhaps?
Oh, sure. We look for stocks with a value grade of A or a B, strong relative strength, and quality grades of A or B, which reflects high quality and good quality, respectively. So on the next slide, we have the components that are going into the VMQ scores and grades. So a lot of boxes do need to be checked before a stock goes into the VMQ model portfolio in the ideas list. By my count, there are 17 security-specific factors on this list, and that doesn't even include the 13 tests behind the quality Altman Z double prime score and the, John, can you help me pronounce that name, please?
Piotrowski?
Yeah.
Yeah.
Piotrowski.
Well, I'm not sure if it's Polish or Russian, but it's my name Bykowski, so I'm a little bit closer to it than you are.
See, well, one of the joys about investing is you learn something new every day.
There you go. Yeah, it's a finance professor, I believe, University of Chicago, originally when he developed that approach for handling the risk factor of value stocks.
Yep. So we have two risk factors, both the Z double prime and the F score, as a check on quality. Maybe I can move on to the next slide too. So this is a breakdown about how momentum is calculated in VMQ. Stock's momentum score is based on its relative strength against all listed stocks in our database. Relative strength is the price change of the stock over time. We use quarters divided by the average price change of the universe. So if Scholastic, which was a recent add in the VMQ portfolio, went up by 5% in a quarter, and the market also moved up by 5%, the relative strength for that quarter would be 1. If both moved down by the same amount, the relative strength would also be 1. And we want stocks that have been doing better than a market as compared to those absolute scores, which might prevent us from being fully invested.
It's interesting, the momentum score actually changed over time. When we first launched VMQ Stocks, it was equally weighted, and we did some portfolio testing on it, some back testing, paper trading. We found that the weighted relative strength was a better predictor of future stock returns than the straight one, which is why we ended up transitioning over to this.
Yeah, it's a recency effect that we see in cognitive biases, I suspect.
Probably, yeah.
I'm speculating. Shall we move on?
Yes, here's the Scholastic's momentum score.
Yeah, that's an example of what we look at when we're breaking down the momentum score. You can see how the stock has done over the previous 4 quarters. And you can also see the calculation that we double count the most recent quarter, as John discussed before. And I think it's a valuable check just to make sure that the market is seeing what we're seeing, because there are a few things more frustrating than identifying an undervalued stock and the market completely ignores it. So
yeah,
that's
yeah.
Yeah,
you want
that's
that
how we
recognition, and I think it's why I think in some cases that's why you end up combining multiple factors. You're looking for the value companies, but yet the market is recognizing their value. I mean, too often I think you find stocks that are cheap, but it takes a while for the market to recognize that level of attractiveness. And I'm guessing with the momentum, you're hoping that the market's already recognized the fact that the stock is attractive and maybe has some room to run yet.
It's a good confidence check, on what we're all trying to do. I think it's a great addition.
This has been sort of a crazy year. I mean, 2026, we've had ups and downs. We've had a war with Iran that sort of disrupted the flow of energy. But given that we've had this interesting year, what are some of the stocks that have really outperformed this year that are kind of interesting and are perhaps attractive based upon the VMQ framework?
I'm very proud of Par Pacific Holdings because it was the first stock that I added to the portfolio when I got here. That's a petroleum company that I sent out an alert for on February 26th, 2 days before the Iran conflict came to blows, and the Strait of Hormuz was, at jeopardy of being closed. So no one is happy capitalizing on global conflict. But it is up by about 47%. And it's reassuring to be following the strategy, because at the time I was pretty jittery about buying an energy stock. But I stuck with the strategy, just focused on the scores, and the portfolio benefited from it.
That's wonderful. If you follow the markets historically, I know many of our members, they become better investors by education, and you learn what the typical market price earnings ratio is. We've all probably have heard of the Shiller PE ratio and how it helps to indicate whether or not the market's attractive or not. But given that in many cases parts of the market are stretched in terms of valuations, how does the VMQ approach handle that in terms of helping investors navigate how to avoid overpaying for these companies?
Well, VMQ tries to steer clear of potentially overvalued companies, and it provides a framework of discipline. Yeah, it's interesting that you mentioned that valuations appear stretched. And I actually did a little bit of digging around just to see how stretched it might be, taking a historical context. So if we can move on to the next slide, I'll show you something that, as much as I hate to say the word .com bubble, because it brings up some ugly memories, we're going to go into it a little bit. First, I'm going to point out that growth and value, they whipsaw over history about which one is outperforming. And obviously growth is dominated, looking back over the long term. But there have been times of value, and often those value-friendly times are times when the economy is, not performing as well as what we would prefer. And we can see that a little bit more in the next slide, which shows the most recent 10-year performance. Is that 10-year? Yeah, it is. So that's an illustration about the difference between the Vanguard growth, S&P 500 growth, and the S&P 500 value. So obviously there's a big differential there. And going into a little bit further, as many people know, the S&P 500 is very, very concentrated. So let's have a look at that.
Right there.
Yep. Top 10 stocks in the S&P 500 are dominating performance. 2% of the names are accounting for 38% of the market cap of the index. So as we'll see on the slide, I ran 2 of the stocks through the VMQ analyzer just out of curiosity to see how they fared. And yeah, as you expected, the value score is showing up as an F. But momentum has been okay, and certainly both of the stocks are high quality. So will this trend continue for the remainder of 2026? I'm not sure. But what I might do is I might point out just how high the valuations are and how much expectations are built into into stocks these days. So if we go to the next slide. Now, is the market ahead of itself? That's something that I'm going to encourage anyone on this seminar to decide for themselves. And I'm just simply going to offer a perspective. When I think about, say, early 2000, which is, you'll see the highest peak on that chart right there. That was a time where the expectation was that the internet was going to bring a new paradigm of investing. And everyone really sort of bought into every story with very little skepticism in the markets. And then, of course, the markets adjusted. Their expectations became a little bit more, I maybe say realistic. And then as of lately, they've started to creep up again. So the current value on an index called the Shiller P, otherwise known as the cyclically adjusted price to earnings ratio, which uses 10-year average inflation adjusted earnings to account for what might be a full market cycle. You're paying 41.6 times that. So the average over the past 20 years has been 27.7 times. So there is a big difference. And again, I don't know whether it's going to continue next year, but I am raising up a cautionary signal, maybe.
And I'm just calling an audible here, but to the extent that this is a chart of the S&P 500, when it comes to the VMQ stock service, I mean, you're not necessarily limited to just those stocks. And you're able to find, in some cases, attractively priced securities that are in different cap ranges or that are not part of the 500. So, it's possible that even though the S&P 500 may be stretched, perhaps smaller cap stocks or mid cap stocks are not as stretched in terms of valuations. I'm not sure if you've seen anything as that when you're coming across your ideas list for VMQ, are you finding that they fall into certain gap ranges? This is a bit of an audible, so I'm putting on a spot here, Sam. Sorry about that.
No, that's quite all right. I did look at that actually, John. And if you go to slide 29.
Well, I'll come back later then. I'm sorry. I apologize.
We'll come back later to it.
No, sorry about that.
Okay. No, that's right. But the short answer, John, is that it's closest by looking at an average market cap range to be about mid-cap value.
Okay.
Yeah, I think is about where it finds.
Well, if you are new to VMQ and you want to get started, what are your recommendations?
All right. Well, the first thing I'd suggest is that you review all the rules in the strategy to make sure that it fits with your investment beliefs, because obviously it's a very disciplined approach, but the key to success in one of these sort of styles or one of these sort of approaches is that you do it consistently. And in order for investors to be consistent, it has to fit with what they believe and what they see in the market. So I would start off having a look at all the rules in the strategy, which is available on the VMQ Stocks page. And then, maybe you would dip your toe in by looking at the analyzer, which grades any stock that you're interested in. So let's say that you are a growth investor and you're interested to say, okay, what's the value perspective on this growth stock that, I absolutely adore. And maybe as you dig deeper into the value score, or the quality, you might find something that you want to pursue further, you want to investigate before you take a position, or, even whether you decide to sell it or not. So it's just a different perspective. And it's a good way to start out and perhaps be more comfortable with the strategy overall.
I put up the first screenshot that says using the VMQ analyzer. So do you want to walk us through some of this information?
Sure thing. We have the value score, and the grade below it, and also the momentum and the quality score. And those are very handy, but actually the analyzer goes a little bit deeper, which I think is on the next slide. So you're seeing the individual indicators and the ratios that are contributing to the overall grade. And if you were to scroll down those sample pages, you'd be able to see all the ratios and where their percentiles fall. So you'd actually be able to get a pretty close idea, on what's driving a grade. Good level of detail, good perspective.
So what other, I'm sorry, go ahead.
No, please go ahead.
Well, I was going to ask, should I jump ahead and ask about other resources that VMQ subscribers can use?
Sure thing. If you become intrigued with the strategy, which I hope you will, you might want to consider subscribing and getting the weekly newsletter where I'm analyzing the stocks, providing some perspectives, discussing additions and deletions, and researching stocks that appear on the ideas list that might be interesting. And hopefully you'll enjoy my writing.
Tell me about the ideas list.
The ideas list is a list of the stocks that are actually qualifying for purchase with new money. And I think at last count, there were somewhere around 88, if I remember right. Yep, 88 companies that qualify for new purchase, which includes some of the stocks that are in the model portfolio. And the ideas list is a very useful tool if you want to create a VMQ-friendly strategy that follows your own sector allocations, or you want to graft it onto an existing portfolio while still keeping your preferred sector weights or even market cap weights potentially.
And what will you find on the ideas list?
The ideas list is available on the VMQ Stocks page, and I believe it's on the headings ideas.
And I think you were kind enough to share some of the top 10 companies on the ideas list today, one of your slides here.
I did. Just out of curiosity, I'm not going to tell which one I'll be adding on Wednesday because there's a big cash position that needs to be invested. But certainly, those are the most interesting stocks I'll be looking at because of their high scores.
No,
now, the idea.
Go ahead. No, it's funny. I see actually there's a stock on here from the growth investing service as well. So I guess conceptually, value and growth aren't necessarily mutually exclusive. In fact, I guess you probably want some growth when it comes to value investing as well.
I have no problem with growth, John. Growth is always a good thing.
I even see an old shadow stock here, Flex Steel, which has been on and off the shadow stock list. I think it ended up becoming an interesting idea over time as well. So there's a lot of interplay between some of the different model portfolios we have as far as the ideas list.
Yeah, I see Flex Steel a lot on a lot of lists, but I'm still not saying anything about what's happening on Wednesday.
Fair enough. I have to keep meat in suspense as well, I guess.
Happy to.
Should I go forward now, or the next slide?
Yeah.
The help and
Please.
resources slide.
Okay. So this is a reminder that almost any information that you want to find out about VMQ is available on the help and resources page. You can find some advice about creating a portfolio that reflects your interests and your beliefs and approaches. There's a quick start guide, there's a user guide, strategy, and frequently asked questions. So that was the first thing that I went to when I was told that I was onboarding with VMQ. And again, thank you for the opportunity, John. I appreciate it.
Oh, it's a pleasure.
Yeah.
As long as we have you on, yeah, I'm kind of, you have a long history with investing, and what do you wish you had known? Let's say you had a young Sam getting started, and you had this elder Sam giving you some advice. What kind of bit of advice do you wish you had gotten as a starting investor that the Sam knows now?
A great story doesn't automatically mean a great stock.
Interesting.
Yeah,
You elaborate on that a little bit. Is that why you like VMQ because it's quantitative based?
VMQ is a valuable check against the story, I think. And it's certainly great to find a narrative. And one of my favorite authors, Robert Schiller, stresses the importance of a narrative in driving stock prices. So it's nice to find a story, but markets can get overwhelmed by a story and they can take it too far. And that's where some of the uglier corrections have come from. So certainly I like a theme. Certainly I appreciate a great product. I'm a fan of Apple. Yeah, but I'd also like to be conscious of, say, how many years of earnings are we paying for in advance? And how much will the earnings have to grow in order to justify that price?
It sounds like we have a offer for members who want to try out VMQ stocks as well as all of our other newsletters. It's this platinum offer. But in the meantime, Sam, I'm going to open the floor to questions. But before we do that, I guess, as we're waiting for the questions to come in, when you're not analyzing stocks or studying charts, what do you like to do to unwind?
All right. In my off hours, I'm a bar band musician. I play lead guitar for a cover band. Just this past weekend, I was playing at a shopping mall for a couple hundred people for July 4th weekend.
How'd that go? How'd the weather hold up?
It was the hardest $100 I ever earned in my life, short of the Army. I was rained on. Any number of my bandmates could have fainted from the heat. But yeah, it's a privilege. It's a challenge.
Understood. Got a question here from a member. Does AI still adhere to not taking a new position in a stock that is already held in another AI portfolio?
No.
So we don't we try to avoid if it's held in too many portfolios, but all in all, if a stock passes a strategy in more than one portfolio, we will allow it to be added. The difficulty comes into place is that sometimes the sell rules for one approach may be a little bit different for one than another. I remember for a while there we had a healthcare company that ended up meeting one of the sell rules in SSR stock, but it was still being held, I want to say, in VMQ for a while afterwards because it had a little bit different criteria for selling. That's, I guess, the biggest challenge is that occasionally the reason why a stock may be sold, because all of our model portfolios have quantitative rules for determining when to buy, when to sell. But sometimes those rules are a little bit different from portfolio to portfolio. Some are more momentum based, some are strictly value based. So that becomes, I guess, the more difficult method just to understand is why a stock may be maybe no longer follow the strategy of, let's say, one approach, but still follow something that is applicable to another one. So that is, we don't have that particular rule there. Do the dividends factor at all into the valuation model?
Not really. Yeah, it's not one of the indicators that I follow. But
it's interesting. I think so. I think the one measure we do have though is shareholder yield, which is I think one of the valuation metrics that we have that make up the part of the value score. Because the value score, as you noted, is a composite of a number of different scores. We look at price to book, price earnings, cash flow, and shareholder yield combines both the dividend yield as well as the reduction in the shares outstanding, and popularized by people like Matt Faber, who thinks that it's the impact of share purchases is also a positive for investors, and companies that are reducing their share count are doing so at a benefit to investors. So we don't directly factor in dividends, but we do look at shareholder yield as one of the several parts of the value score. What are the VMQ sell rules?
I'm sorry, one more time, please, John.
I remember Paul is asking, what are the VMQ sell criteria? What makes you sell a stock within the VMQ stocks strategy?
Sure, I actually have a page on that one too, if I could find it. Okay, for a start, the momentum would be an F grade for 2 consecutive weeks if the stock has been held for 6 months or longer. Likewise, if quality or value declines to an F, the stock should be sold. Another case might be a corporate action, and there's one in the portfolio that we're currently examining, that caused a substantial change to the actual structure of the stock. If a company fails to file its financial statements with the SEC on time, that's a very good reason to delete it. And if it has underperformed the benchmark for, I think it's the prior 3 years, John, without my notes in front of me.
Yeah, that's correct.
Yeah, that's correct. The prior 3 years. So that's another possible reason to delete the stock. Any others that occur to you, John?
I think you got it all. Yeah, sorry, but I was looking ahead at some of the questions. So I was listening with one ear and reading with another.
Sure.
Because a critical question here is, sounds like you're a cover band, and what type of music does your band cover?
Anything from Elvis to Bruno Mars. And yes, we play Sweet Caroline.
Does the VMQ process consider industry balance to avoid investing in certain sectors?
The strategy doesn't, and I rely very heavily on the total value, momentum, and quality scores. But when I'm looking for an addition in the model portfolio, if I can address an overweighted sector and still have a very high score, I'll use that for an addition.
When it comes to, we have a member here who's used the VMQ analyzer at times, and in some cases he's found a stock that's ranked A in value and A in quality, and it still had an F in momentum, but the price had just started to take off recently. I guess the question is there a lag in how long it takes really for that for the momentum score to fully reflect? And I guess you outline how the momentum grade is a whole year, and it does give higher weight to the most recent quarter, but I guess it could still take some time for that really momentum score to bounce back up to get to a higher level. Any other color you want to add to that, answering that question?
I think that's the nature of a weighted average, isn't it?
Yeah, very much so, unfortunately.
Yeah, it's a lag.
Yeah, I guess I guess you could look at things like more exponential type averages that are more even higher weight to more current stuff. But in general, you're right. If you're averaging anything, it's going to have a bit of a lag. And I guess one question here is regarding benefits. I know that within the VMQ stocks area, members can subscribe for alerts. So member had a question: is do premium members still get alerts? So yes, if you're a VMQ subscriber, you can establish. You could build your portfolio within the hub, and you can set yourself up for VMQ alerts. And you can get a daily and a weekly update to letting you know when the grades have changed on any of your stocks, if you still want those grades. And get a weekly summary or a daily change as well. We still have a little bit of time. I know you put some special slides at the end of this presentation. Anything you want to, any color you want to give on any of this information that might be helpful to subscribers?
Sure. Yeah, I just want to contrast VMQ with even its benchmark to show that we're not exactly benchmark huggers here. There's such a big difference in the weighting on information technology. And just as a reminder, we don't invest in real estate investment trusts, and we don't invest in financials. But we are, in this case, we're currently heavier in communications, consumer discretionary, and industrials. And also, as I've mentioned earlier, there's a large cash position, but that's going to be invested shortly. And if we go on a little bit further, yep. You talked about the average market cap for VMQ. So I did a calculation on it. And the average VMQ market cap is about $12 billion or so. It falls pretty close in the middle of S&P's guidelines for a mid cap. And I've even seen that a little bit in the index performance, where VMQ's performance seems to match up pretty well with the S&P mid cap 400.
Interesting. And I see you've got a number of stocks all over the various indices. I had a member who had a question about performance, and I guess you've got a slide here to describe some of the performance.
I do. Yeah, so we've been enjoying a pretty decent year to date, but we do have a lot of catching up to do, in large part because we were building from a base level of underperformance in 2018, which was the beginning of the strategy. So we're still playing catch up for it.
And you were saying there might be some changes up in the air?
Yes. BJ's Wholesale and United Rental both have value grades of D, which hints that they might have become expensive. We're not going to do anything until the stock actually has an F grade. And Charles has a portfolio which has Patrick Industries, or he has LCI Industries. That's right.
Actually, a Stock Superstars report has
It is
LCI.
SSR.
Yeah, has LCI Industries as part of the NEF approach.
All right.
And you're right. In this case, Patrick Industries, which I guess is a holding in VMQ, those two companies are merging. But if following the news in SSR, these talks have been on again, off again, and it seems like it almost required perhaps a shift in owner and management in one of the companies for the merger to get finalized. So it appears from the outside, but the deal has been struck. I guess we'll see what the resulting company looks like.
Well, I look forward to discussing with you, John, but I'm also conscious that you're my boss. So I'll be listening to your thoughts very carefully.
We're beholden to our members, trying to do what's best for them.
Right. And one other point I'd like to call to members' attention is that we have a big position in United Rentals. which isn't surprising given the performance. And if it begins to exceed 12.5% of the portfolio, we're going to start trimming it down and reallocating it into different stocks.
And Dennis is asking, you mentioned that you don't hold certain REITs, for example. What about MLPs? Do you own MLPs in VMQ stocks?
I didn't see a ban on it on the rules, John.
Yeah, I don't
I
believe.
wonder.
I don't think we have not in the past. Normally, we've avoided non traditional corporate structures, and it also becomes, I think, part of it is MLPs have potentially tax implications depending upon if you hold them in a tax deferred account. So for most of our, I'm not sure if we have to also see whether or not the measures, the value, the quality measures would be really appropriate for an MLP as well, whether or not you get meaningful statistics from that. So I think those are probably some of the reasons why we don't typically add MLPs to the model portfolios.
That's a great question. It might be worth formalizing in the rules.
And I think we've covered most of all the questions. Jenna, anything else you want us to cover before we finish up for the day?
I was taking a look at some of the questions that came in. I think there was one other one. Let me find it real quick. Actually, you did answer the one about the momentum.
When it comes to selling, do you incorporate any kind of stop limits?
I don't think that stop limits are anything that I would worry about in a very, very long-term strategy.
Okay.
Yeah, so that's not something that, I'm not thinking in a minute-by-minute basis for a long-term portfolio.
Yeah, in fact, I know we had some when we first launched VMQ, and momentum was often the dominant factor because we had a market that was generally trending down. And a lot of our members really didn't like the fact that we were in some cases quickly turning over the portfolio. And that's, I think, we did some analysis. That's why I think we ended up creating the 6-month rule for momentum. We first kind of let the value play out for a period of 6 months before we really decide to determine that perhaps this was a value trap or the measures don't actually capture that.
Sure, and I'm also not discouraging the use of stop limits by members. If that's what fits their strategy and their needs, by all means.
So at the end, I guess we're just answering Hal's question. So yeah, we typically hold when it comes to at least momentum, we'll typically hold a stock at least 6 months. Other than that, we've kind of let the value and quality rules. If we see a quick deterioration in quality or a quick rise in value, those are the factors for deletion potentially. And you do invest in, I guess the question member was asking, why don't you invest in financials? And you do invest in financials, and just that at the moment none are passing the rules. Is that correct, Sam?
I think I read that the rules discourage financials because of the accounting.
Okay.
The accounting differences.
Yeah.
And one correction I'd like to make too, by the way, to what I said, is I said that we don't invest in real estate. And to be more specific, we don't invest in real estate investment trusts.
Trusts, gotcha. Anna, any other questions you think pop up?
Let's see. Well, the other one I think I saw come in was, do we use any typical rebalancing rules or a different method?
The only rebalancing that's really formalized is the 12.5% of portfolio value limit, which is a pretty loose sort of a guideline that allows us to let the winners run when they're running.
So what happens in that? So if the stock becomes dominant, you sell off a portion of it. Is that what you're saying? That you still?
Then I would begin to trim it.
Okay. So you kind of let your winners ride, but you take some of those profits along the way.
Yes.
very good.
Excellent. Well, first off, I want to thank both, Sam and John for leading such a great discussion about the 2026 market, value investing strategies, and kind of, taking a more in-depth look at our VMQ stocks portfolio. Really, I like Sam's inclusion of the, potential portfolio changes and the teaser for Wednesday that something big might be happening on the precipice. But before we wrap up and share the special offer I have for our audience, I'd like to give Sam a few minutes for some closing thoughts to the audience.
Jenna, I'm so sorry. One more time, please. I'm having audio troubles.
Oh, no, you're fine. I just wanted to give you some time if you wanted to have share any last closing thoughts or any ideas with the audience before we sign off.
Sure. First of all, I really appreciate VMQ as a very disciplined strategy that takes emotions away from investing. And we all know that emotions can be a killer. And it's been absolutely wonderful these first 6 months with AAII. It's a wonderful group of people, very diligent, very analytical, and very detail oriented. And they're also really nice people. So it's a privilege, and I look forward to speaking with members as well as time goes on. So please reach out to me via email with your thoughts. And I appreciate you sitting in.
Been a pleasure. And as a reminder, we are going to make a slide deck available. I think that question came up a couple of times at the end here. Jenna, you might have some closing remarks, and probably it's going to cover all that information.
Oh, yes. No, it's great. It's a valid question. And then, just wanted to say, if you have any questions for us, Sam mentioned, if you think of something later on, feel free to email us at members@aaii.com. And yes, we have the handouts, the recording, and any other materials or resources that we think are helpful will go out later this week in a follow-up email. And then if you have any questions about, AI's tools or services, feel free to email us at that members@aaii.com, or you can give us a call at 312-676-4307 Monday through Friday, 8:30 a.m. to 5 p.m. Central Time. And as I mentioned earlier, and you can see on the slide deck, is that we have a special platinum promo for our audience today. So AAII members who do not already have AAII Platinum can try it for a full month for just $1. And your trial comes with 30 days of access so you can explore VMQ stocks as well as our other newsletters, model portfolios, and tools. And this link and offer will be included in that email that I just mentioned that goes out later this week. And our offer is valid to webinar attendees through July 12th at midnight Central Time. And then lastly, this presentation was recorded and a replay will be available at aaii.com/webinars, as well as our YouTube account later this week. And then webinar attendees, like I said, will receive an email with the link and other resources in the next few days as well. So keep an eye on your inbox. And with that, we wish all of you viewing good health, good fortune, and a great rest of your afternoon. Thank you so much and take care. And thank you, Sam, for a great presentation and for joining the team.
Thank you, Jenna. Thank you, John. Thank you, everyone.
It's been a pleasure. Thank you. Take care.